Hello, investors and traders, and welcome to the weekly market report. I'm AJMonte, Chief Technical Analyst with Sticky Trades. And before we get into the charts, I'd just like to make a quick announcement. Last Wednesday, we had the Rapid Fire Stock Analysis webinar with our members. We had a great crowd. I had 60 stocks on the table, and I analyzed those in 60 minutes. It was 60 in 60. And next Wednesday, I'm going to keep up that pace. Not quite sure if I'll be able to get 60 down in that hour, but I'm going to shoot for at least another 50. If you're interested in having your stocks analyzed, we open that up to the public where you can type in a ticker symbol, and it's first come, first serve, but we get the first 50 coming out of the Q&A box, and then I will go and look at the charts and analyze those. We have an extremely high percentage of accuracy with regard to hitting targets. And as you will soon see, when I follow the charts, I put out my zip lines. These are the price targets that I draw lines on the charts. I draw diagonal lines. The end of the line is my price target. And you can go back and look at any of the videos that I do. I record everything, and our track record speaks for itself. Again, it's all archived. You could even go back to all the YouTube videos that I've done with the weekly market report so you can see how accurate the targets are when forecasting using candle charts. Now let's take a look at silver first. This is an example of what I'm talking about. This is ticker symbol SLV, and you can see we hit the downside target here. We later hit the upside target here and then blew through that upside target. Recently, we hit this target to the penny. This is how good this gets. We hit that upside target right there at 22.35, and on Wednesday I said we can go a little bit higher, so I raised that target to 22.45. Now, for those of you who have been tracking my trading of silver, I said that if it got up to that target and I saw a drop in volume, which we did right here on Thursday, that I would sell at least 5% of my position, and that's exactly what I did. I am now out of 5% of my position. If it goes higher from here and tests these highs up there around 23, I will sell another 10% of the position. And then if it drops, or even before it hits this resistance up here, if it drops and comes back to fill that gap, I will take all of the money that I've used in these sales of scaling out of small parts of the position, and I will buy back more of the same. So I'll get to buy more shares. I'll parlay that position to a bigger position, and I will keep you posted as the technical signals surface. So right now I have a slight upside target on that again at 22.45, and we'll keep an eye on the volume. Going through the major market ETFs, we look at DIA, you can see that we had an upside target where yesterday we came within pennies of hitting that. Now I'm keeping that upside target at 347.50. Why? Because if I magnify this, you'll see not only is that very closely related to a hammer candle, but that is a bullish harami. The bullish harami is also forming as the CCI down there is crossing with a buy signal. I got to get that whole chart down there so you can see that. There we go. So the CCI is crossing with a buy signal right there. The stochastic is crossing with a buy signal, hence the reason why. We missed that by pennies, but I think we're going to hit that next week. And then you have to keep an eye on the volume, because I do think towards the end of next week, we're going to see a hard sell-off prior to next weekend. I'll get more into that as I cover the geopolitical news. Now looking at IWM, which is the small cap ETF for the Russell 2000, came again. Look at that, so close to hitting that target right there, 186.90. We're currently closed now at 184. I do believe that the IWM is going to go up to hit that target. That is still in play. Look at the stochastic, it's heading up. CCI is actually showing a positive divergence. Again, I'll describe that as I teach through repetition. Here we have a lower price low, but if you look at the low on the CCI, it's a higher low. That's known as a positive divergence. Now, I'm not getting crazy bullish here because, as you can see in the past, we're hitting targets left and right, but I do believe we're going to see a little bit of a rally as the markets digest what Jerome Powell said in Jackson Hole this week. So that target is still in place. If we look at QQQ, this is slightly different. We've hit the targets on the upside. We're still looking to hit the target on the downside. I don't think we're going to hit that target right away, so I'm going to have to shelve that. Why? Because we have a hammer candle right there as I magnify it, and the hammer candle is doubling up as a bullish harami. Now I'm just going slightly higher on the Qs right here to test these highs. And then I think we're going to make another hard turn south to hit that downside target eventually at 353.74. So to reiterate, upside target at 372.60, then right back down to 353.74. Let's take a look at SPY. This one has hit the upside target right there perfectly. My upside target was 438.98. Right after we hit the upside target, we had a bearish engulfing, and the same thing is happening in SPY as what we saw in the Qs. We have very close candle to a hammer that's bullish. It's a bullish harami doubling up into that hammer-like candle, and that is telling me we're going to go a little bit higher. I'm putting that upside target back up to that moving average of 443.93. Look at the stochastic oscillator down here pivoting up while the CCI is still heading low. I think the CCI is going to start to head up just a little bit right there. Now, with the SPY, I often look and analyze the VIX. Well, what happened on the VIX? Well, we hit that downside target on the VIX right there of 1641. Now, we have a bullish engulfing candle yesterday that was negated by this big red candle, and the fact that we closed below that 20-period moving average tells me that we're still on track for hitting that downside gap fill point, which is down here at 1430. That is a possibility, although I'm putting that with a big question mark next to that target, because at any point in time, if the markets decide to start to sell off, this VIX is going to start to rip up. And we're very, very close to the month of September. And as you know, September and October are the most notorious months. Now let's go to the geopolitical news. As I mentioned, Jerome Powell rode in on his bear this week. The markets initially got shocked when everyone started talking about higher interest rates. But then today, on August 25th, the market seemed to have calmed down a little bit and feeling a little bit warm and fuzzy about the future. However, as I will continue to report on, you see the banks are still in a tough spot. For as long as the Fed continues to raise rates, regional banks especially are going to be in the crosshairs. I would not be surprised to see continued downgrades in these U.S. banks. The dominoes are going down. They cannot stop these dominoes from going down because the rates are still moving higher. An inflation target of 2% means that the interest rates are going to have to remain high for a while until they have inflation completely under control. Again, the real risk for this market is that the Fed is looking at inflationary data. And while we're looking at inflationary data as well, there is still a lot of manipulation. I talk about this all the time, and here's case in point right here. We had another revision. Remember, I talk about this a lot of times. The numbers will come out. They are more or less absorbed by the market. And then in the wee hours of the morning, what happens is they revise these numbers when the markets are closed and everyone's sleeping. I'm just using this as an example here, but it happens that way. When these numbers are not in the news, they revise them, and then it comes out later when the market is already moving in a favorable way. They'll put the revisions out. So the markets are not affected by these revisions. Again, manipulation took place front and center when NVIDIA released their earnings. And on Wednesday, I showed this to all of our members to show exactly what the footprint looks like with a pump and dump. 1 minute before the market closed, we saw this big spike in volume right there. And then there was this lull as the markets and the world was waiting for NVIDIA to release the earnings. Then what happens? The earnings come out, and then we saw another big lift in volume for a prolonged period of time in aftermarket hours, and they pushed it up. So there's the pump it up right there. And I told everyone, watch for the dump on the opening. And that's exactly what happened. Look at the opening volume right there. It more than surpasses what happened on the close from the day before. And they sold it exactly on the opening. And what I told everyone on Wednesday, and I showed them a chart of what I thought was going to happen the following day. I put this green dotted line up here as where I thought the market would open on NVIDIA. And then I drew this downside target of 484.69. What happened? It opened right up there at that high, came right back down, and eventually closed the gap. It even surpassed my downside target. And today, as I'm recording this again on August 25th, NVIDIA was down another 11.5 points, with the oscillators still going low. So I don't think it's over for the tech sector on the way down. However, I think we'll get a little bit of a bounce earlier next week. And then I think we're going to see another wave lower as we head into September. Now, what's coming back into the market? Well, it's not what's coming back into the market. It's what's happening around the world. The masks are coming back. Some of you are already faced with this, no pun intended, but the masks are coming back. And I believe that we are going to see another wave of pandemic shutdowns. This is a bold forecast. I know that's going to ruffle a lot of feathers amongst our followers here, but this is the evidence. This came out on August 22nd. And interestingly enough, as I was scanning for more data, I found this on Twitter. If you go to Natalie Winter here on Twitter, I do not subscribe to her, by the way, but I found this and I found it very interesting. She has a list of invoices that have been sent to different regions of the U.S. And I find it very interesting, if you look real close here, that these are in areas where congressional representatives are more or less pro-lockdown, pro-masks, pro-control. And don't take my word on this. Again, I know you can, but don't take my word. I want you to do your research and see with your own eyes. Go to this woman's website right here and pull up all the receipts. You could hit the arrow and you could go to all the receipts and then go into the congressional districts right here. They have them labeled as to who was being invoiced or the recipient of that invoice. And do your homework. You're going to see the history of those folks that represent those districts are very, very pro-lockdown. So I see this happening. I think it's going to be a shock, again, to our markets. I don't know if it's going to be as severe as what we saw in February and March of 2020, but I see it brewing. I see the handwriting on the wall, and I'm just announcing it to you as an FYI. Take that for what it's worth and trade against it, or at least be prepared with a risk management plan. I talk about this quite often with the BRICS nations because I am following this very closely. BRICS invites 6 more countries, including Saudi Arabia and Iran, to be new members. As you know, Iran is not a big fan of the U.S., and this coalition of countries are basically creating a parallel universe, a parallel economy to what we have here in the West. And they will not need us at all. This will absolutely lead to a delinking of the US dollar for the price of oil per barrel, and then you're going to see inflation come back. So remember the argument that the Fed is talking about. They want to get inflation under control. Well, guess what? If oil starts to go up, whether they count that in the core inflationary numbers or not, it's going to create inflation across the board, and you're not going to have any control over it. It's going to stem right from the BRICS nations. Now, I'm making another bold forecast, and I do this intentionally on recorded lines so I could go back in history and look at what I had said on those days. And I believe that we're going to see a very heavy sell-off, maybe even a Black Monday type of event on September 18th. Why do I say that? Well, if you're a business owner, you know that you have to submit your estimated quarterly tax payments, and that is on the due date of September 15th down here. Well, what also happens on September 15th that a lot of taxpayers are oblivious to is that that day is the day of options expiration. That's options expiration Friday. This is not a common occurrence. In fact, this is very rare that this happens where you have an expiration day on tax day as well. Now, think about this. Just play this out. You're a business owner. You have to pay your estimated quarterly tax. You got money in the bank. So where are you going to pull the money from? Well, you're either going to pull the money from the bank, which by the way is going to hurt the regional banks as they lose those deposits, and it puts more pressure on them as the regulators continue to tighten the screws. Well, that is one scenario where they pull the money out of the bank, or they go ahead and they start selling the week prior in the market to raise the cash. And then once you are past the settlement dates, they could move or wire cash out. And I think this whole turn of events is going to lead on a heavy sell-off on the 18th through the 22nd, right into that week. So again, you heard it here first. Remember, on Wednesdays, I do my rapid fire stock analysis. It's not too late to register with Sticky Trades right here, right now, so that you can participate in the next event on Wednesday. And I hope to see you there because we're growing that. That's one of the most popular services that we provide. And another thing I want to do is thank you. Thank you for liking and sharing and commenting on this video. You are helping us grow this channel in a tremendous way, and we have you to thank for that. So you have a great weekend. I'll talk to you on the next publication. So long.